Is gold an investment option for higher returns? What is the role of gold in your investment portfolio? To help you discover more on gold as an asset class, we have our investment expert Usha Nair with us. Usha, the stage is all yours.
Gold as an asset class, as far as Indian market is concerned, is a very traditional asset that we all have, we all own in plenty, and it is an asset which moves in very long cycles. So I will just share some data points. I'm showing the chart of gold price in India. So this is starting from 2000. The date is mentioned here. I've taken it exactly 23 years plus, 3rd of January 2000. Now, if you see, the price of gold did not move for a very long period of time. You can see the chart here. It hardly moved. Then, after the global financial crisis happened, it moved up very sharply for a period of 3-4 years. And then it again remained like this period, if you see, it hardly moved. And then when COVID happened, it moved and then it came down and it has remained there for quite some time. So the issue with gold as an investment choice, like we have gold funds, you can do gold ETFs, etc., or even gold as a bullion that we buy and store at home, etc. It moves in very long periods of underperformance. So the return in gold for years and years need not be anything. And then suddenly it will give you a 15%, 20%, 30% gain in 1 year, which will compensate for the period of underperformance that you had for 3-4 years. Then suddenly it will become a flat asset and then it will move ahead. Usually the good time to consider gold is when there is a crisis that is there in the market. The crisis in the market is usually like COVID happened, global financial crisis happens, banking crisis happens, because it is an asset that you run to as a last resort. It is not a paper currency. It is a physical asset. You hold gold in terms of either a bar, a bullion, or a jewelry, and it's an asset and it's a commodity in that sense, because it's a touch and feel commodity. You can mine gold, you can see gold, there is physical gold. That's how gold is considered. It's also something that is considered to be always giving you a return which is in line with inflation. So if inflation is high, then gold prices move in line with inflation. So it gives you the return which is in line with inflation. It's a crisis. It's a thing that you go to in the last, like a resort when you know a lot of, like if there is a huge belief that dollar is going to crash, then the gold prices will do well, because you hold a lot of assets in dollar. A lot of people, the world runs on dollar assets. And if dollar is going to be in problem, if US is going to be in problem, then gold prices will start going up, because everybody then believes that this is not an alternative that I want. I want gold as an asset because that is a safer asset to consider. So in the recent times, after a long period of underperformance, 2020, when COVID happened, gold prices did well. And you can see that here. I mean, somewhere here is, like if you take here, this is the COVID period. I'm putting somewhere like March 2020 here. And from there, you can see how the graph just moved up. Right? It just shot up very significantly. And then when things started improving, when vaccines came up, when you knew that the world, because COVID was a period or a crisis that we have never experienced. We didn't know how things were going to pan out. And there were all sort of stories that were going around. And that led to, when things improved, the prices corrected. And then there was again the Ukraine war. So there was a bit more of, you didn't know what will happen to, because there were talk conversations that it could be World War III and all of that. And that led to gold prices going up. Again, it has remained a little bit of muted. So last, I would say 3 years, it has been okay from a gold perspective. But an investor, like if you see chart here, the period here, the graph may not explain it, but you can see it's a very line graph. That means there has been hardly any movement as far as the price is concerned. So if I'm investing a large portion of money with the expectation that huge return will be made, then your timing will have to be extremely perfect. As an asset allocation, always have between 5 to 10% in gold, and don't expect it to be the best asset class in your performance. The way to look at it is, when nothing works for you, this asset class will work for you. So it is that money that you keep in your wallet, which you will never take, You will always refill the money from the ATM in the main pockets, but you have hidden a 500 rupee note at some stage or somewhere else, where if I've forgotten to carry my wallet, this money will be there. Like in car, sometimes people keep, or in a two-wheeler in a small, or sometimes people keep it in an office cupboard, like that. This is in a worst scenario. If I forgot my purse or if I cannot reach an ATM, I need to have something with me. Gold has to be seen as that asset. When everything fails, gold will do well for you.
Thanks for your detailed answer. If you have any doubt regarding this or any other financial or investment decision, don't hesitate to book an appointment with our financial expert. The link to the appointment is given in the description below. And also, would you like to know more about finance and investment? Then we would recommend you to attend our live webinar. The link to the webinar is also given in the description below. The webinar is absolutely free. If you like this video, hit like, and if you are new to our channel, please do subscribe.